So for those of you who don't really come from the stock market world, and that's fine, you don't have to, that's why I make content on my channel, for those of you who don't really care that much, and I can just explain to you what is happening with prices. And for those of you who don't come from the technical analysis world, which technical analysis is a tool, there's all different, it's a broad spectrum of things, of looking at charting data and looking at moving averages and whatnot. If you don't come from that, that's fine. I'm just going to explain it very simply for you, and I'm going to break it down for you, and then I'm going to break down why Bitcoin is set to surge in 2018. So let's get into it. I'm the Naughty Investor. I hope you're all ready to be very rich if you've been following my advice and buying the cryptos I've been telling you guys to buy, and buying the stocks I've been telling you guys to buy, and also using the software I've been telling you guys to. It's free, and that is Robinhood. If you're going to buy stocks and bonds, you have to be using Robinhood. Free trading, link in the description. So let's get into it. So for those of you who don't know, a bullish pattern is prices are going up, it's positive, it's rising. Bull is good. A bearish pattern means the prices are correcting, it's going downward, it's declining. So bull, higher, bear, lower. Now let's get into the moving averages. A short-term moving average is usually 15 days, but different traders use different techniques. But I like to use 15 days because it's long enough to where it gives you a good price or a good data point, but it's not too long to where it's not any more a short-term moving average, right? And a short-term moving average is basically taking the price of whatever security we're talking about, or whatever asset we're talking about, Bitcoin, a stock, a bond, real estate, whatever it is, and you're taking the price from 15 days, every day 15 days, so it's going to be 15 prices, and you're going to divide it by 15, of course. You're taking the average. Pretty simple stuff. And a long-term moving average is a 50-day, which is what I use. I mean, some people use 60, there's all exceptions, right? But a 50-day. In a 50-day moving average, a 50-day moving average is just doing the same thing as with a 15-day, only with 50. So you're taking the price of Bitcoin for the past 50 days, and you're going to add them, put them all together, and you're going to divide it by 50, right? So a golden cross, and that is the title of this video, and it's somewhere in the video title. A golden cross is a bullish breakout pattern formed from a crossover involving a security's short-term moving average, such as the 15-day moving average, and this is going to rise against, or break, I should say, above its long-term moving average, such as the 50-day moving average, or resistance levels, which resistance levels, that's a whole nother video. Now, because long-term indicators carry more weight, the golden cross indicates a bull market on the horizon, and this is reinforced by high trading volumes. So if you're getting the short-term moving average piercing the long-term moving average, and you're getting it reinforced by high trading volumes, that is a golden cross. And you don't have to have the high trading volumes part, but that just adds to it. Now when we look at Bitcoin, specifically look at Bitcoin, and Bitcoin's down today, right? So is Ethereum, and so you have to buy. Always buy the dip. Bitcoin's 50-day moving average has just pierced the 200-day moving average from below. So this is a lot more long-term than this is a super golden cross, right? So a golden cross could just be a 15-day piercing a 50-day. But Bitcoin, in the case of Bitcoin, excuse my phone, in the case of Bitcoin, you're having a 50-day piercing a 200-day. So this is super long-term. And when we get to technical analysis, it's all about the long-term. Long-term always gives you better data because when you're talking about moving averages. When you're talking about moving averages, long-term always will give you better data because you're getting a lot more data in general, and you're able to get a much more clear picture on the stock, the bond, the crypto you're buying. Whereas if you're looking at it in the short term, you're not going to get as much data. So we have Bitcoin, their 50-day moving average is it's piercing their 200-day simple moving average. And the simple moving average, I'm not going to get into that. That is it's a simplified version, but because it's so long term, it's much more advanced than just a normal golden cross. So what this shows us is that Bitcoin, it has a lot of support. And what support means is it's very unlikely to decline past a certain point, and it's going to likely, it's going to go up a little bit, bounce down to the support, go up, bounce down to the support. We are looking at a huge bull run with Bitcoin. This is unheard of. Not unheard of, I'm being a little bit dramatic here, but we have super long-term data showing that Bitcoin is having a golden cross, and that the bullish breakout pattern is, it's forming, it's happening. So if you've been following my advice, you're going to be making a lot of money. If you haven't, it's time to start. Hit that subscribe button, leave a like. I'm buying more Bitcoin today. I think you guys should too. Use whatever you're using. It doesn't matter what you're using. Just don't keep your money in the exchange. Bitcoin is set, excuse my phone again. Bitcoin is set for a very, very bright 2018. It is. Now, I don't know about 2019. 2019, we might have a bear run, right? That's fine. All that means is that the price is correcting. So in 2019, maybe Bitcoin's price goes down 20% for the year. Whatever. That's fine. It's normal for that to happen. People like to lose their minds when they see something go down and they sell off of it, and then the next year it comes back up. So let's say, 2018, it rises up 50%. 2019, it goes down 20%. 2020, it rises up another 20%. I'm just speculating here, but I'm just making that point. Don't sell off just because you see prices declining. That's what idiots do. You buy low, you sell high. You buy long term. You don't sell your Bitcoin for the next 15, 20 years. And even then, you don't sell all of it. You maybe sell half of it and you buy yourself a nice home. But you don't go and just selling it, buying Ferraris and shit. Stuff that depreciates and doesn't make you rich. It just makes you look rich. Naughty investor, have a great day.